Let's take another quick look at oil prices. We did see crude slipping today, but that's after 4 straight weeks of gains. Our guest is bullish on the sector, especially when it comes to some Canadian companies. We're joined by Eric Nuttall, partner and senior portfolio manager at Ninepoint Partners. Eric, always great to see you.
Great to be with you, Andy.
So we have, oil has been rising for about a month, but it's still well down from the fall of last year. Why is that?
Sure, that's fine. Our thesis has been that we would average $80 oil so far this year. I think we're actually about $1 higher than that so far. We've seen oil recover from the strength following the OPEC meeting back in June, when the market had to digest the messaging from OPEC that, market condition dependent, they would be returning some of their curtailed volumes. But we remain in a very, very healthy price level for oil producers. And in fact, we don't see oil going much further than current levels. We think a price of about $85 WTI, $85 to $90 Brent is reasonable from now to the end of 2025. And our thesis really revolves around a few key things. One, demand remains fine. It's not shooting the lights out. There are areas of weakness, such as ongoing weakness, distillates demand in China. But at the other end, jet fuel remains very strong. I think I saw a stat this morning that TSA reported record number of people flying over the weekend. So demand's fine. When we look at supply, we see the U.S. rig count continuing to fall from about 500 to 479. U.S. shale production is down so far this year from December levels. We see the OPEC cuts, record compliance in the month of June. And so it all expresses itself in inventories. We have inventories falling this year, reaching record low levels, and allowing OPEC, depending upon volatility, market balances, price, etc., to begin to bring back the barrels that they've removed from the marketplace and slowly, gradually return them throughout 2025. So we're very, very content. I have a saying that I use on Twitter, like every day above $80 oil is a phenomenal day, because the free cash flow being generated by this sector is unbelievable and still underappreciated.
What about the fact that Russian oil is still having apparently no trouble making it onto the world market?
Absolutely, and Iranian production too. Iranian exports hit a record high, I think last month, of about, or production 3.5 million barrels per day. And it speaks to, there is talk and then there is action. You have a US administration, you've got an election this November. They do not want a high gasoline price, and they will do anything that they can or need to have the oil price, the gasoline price not spike up. So what do? They talk about Russian sanctions, price caps. They don't enforce them. They talk about Iran and the red lines and uranium enrichment. What do? They turn a blind eye to sanction enforcement. And so really, it is all a theater, political theater. It is all noise. What counts is inventories, because that is the intersection of supply and demand. And we see global oil inventories, despite high Russian production, despite high Iranian production, etc., reaching all-time lows seasonally by the end of this year.
Sorry, what was all-time lows? Which production, Eric?
We see global oil inventories reaching record lows by the end of this year, and that's very supportive of price. So we think now, like, there's a lot of talk about a political risk premium, etc., and what's going on with Israel and Gaza, maybe Lebanon, etc. We don't see there being any political risk premium in the oil price right now, when you look at where U.S. oil inventories are, but more importantly, where global oil inventories are today.
That's interesting, though. You do think that, we've heard it before, that the American administration is anxious to keep oil/gasoline prices low.
Absolutely. Everything they do. Now, don't look at talk, look at actions. When you look at the price caps on Russian production, the lack of enforcement on sanctions on Iranian barrels, going to Venezuela and asking Maduro and saying, just tell us you're going to have a free and fair election, and we'll turn a blind eye, we'll ease sanctions, allowing Venezuelan production to go up a little. And then I think it was like 6 days later, he threw his key rival in jail. So it's very, very clear that you have the U.S. administration talks about cartels and manipulation and whatnot. They have been the biggest manipulator of the oil price over the past 2 years with their lack of enforcement of their own laws and rules, and also with the usage of the SPR, the Strategic Political Reserve, to weaponize that to drive the oil price down ahead of the prior election.
I know that you are adamant that oil and gas is not a sunset industry, but we are, and I know the adoption of electric vehicles has slowed, but they are selling, and cars do keep getting more and more efficient in the United States.
Absolutely. We do see polls where only 3 out of 10 Americans are considering buying an electric car. We see polls out last week saying that 5 in 10 current owners of EVs wish they never bought the sucker in the first place and are going to go back. Google that while we're talking during the commercial break. That was out the past 2 days.
Wow.
So is the future electric? Probably not. I think it's going to be, full electric, not. It's going to be hybrid. But it's been this ongoing discussion about, my God, we're on this rapid transition. It's a sunset industry. What are those poor guys out west, the oil for workers going to do because we're not using this stuff? We're banning plastic bags and straws and such. The reality is, this is not a sunset industry. The growth in oil revolves around a few key factors. One is demographics. The world's going to grow by 23-24% between now and 2050. Secondly, the vast majority of the world is not focused on decarbonization. They just want energy affordability and energy accessibility when 2.3 billion people on this planet burn either wood or dried cow dung as their primary cooking source. And so we see the world through a Western lens. The vast majority of the world is not focused on decarbonization. They want what we have. They want the lifestyle that we have. It is hugely energy reliant. It is hugely oil reliant. And so we think the demand for oil will continue to grow for at least the next 10 years. And when we have companies trading at 15, as high as 28% free cash flow yields, because people think, well, geez, this is a sunset industry, there's zero value in a barrel to produce 5 years from now, there still remains a tremendous opportunity in the Canadian oil patch.
Eric, good stuff. Who did that poll related to the EV owners wishing they hadn't bought
I'm going to go on Twitter during the break and I'll find it for you.
Okay, that's amazing. Okay, coming up, Eric Nuttall sticks with us for Hot Picks. He's got 3 of his top ideas in energy.